Good afternoon. Welcome to the Partners Group presentation on the Long-Term Care Trust Act and its impact on Washington State K-12 employees through reduced payroll deductions. So my name is Mark Rose. We're going to be taking about 20 to 25 minutes to go through this today. If you're watching this today, that's most likely because your school district is one of the few school districts in the state that have elected to implement a program that allows you to opt out of this tax. If you have questions regarding this presentation, there'll be an email that you can email, and I'll be happy to get back to you. You can also reach out to your district payroll if you have further questions on that. With that said, we're going to jump right into the program. So the Washington K-12 employees and the impact of the State Long-Term Care Trust Act. So today we're going to cover the Trust Act key points, the important dates, the solution to the additional payroll tax that you're going to be asked to pay, the application process to apply for the policy that will allow you to opt out of the tax, additional support, and then how to apply for the payroll tax exemption. There will be time for Q&A because this is a recording. You can simply email those questions to me and I'll be happy to get back to you. So the Long-Term Care Trust Act key points. The Long-Term Care Trust Act was passed in this past legislative session and creates a very minimal long-term care benefit that you may or may not be able to access at some point in the future. This benefit will be paid for through payroll taxes for every single Washington State K-2 employee, and that includes Washington State K-12. The new payroll tax will become effective on January 1st of 2022. It's January 1 of 2022. All Washington employees will be required to pay a 0.58% payroll tax to fund this new long-term care program. To put that in perspective, if you make $50,000 a year, you will see $24.17 less in your paycheck every month beginning in January. If you make $100,000 a year, you'll see $48.34 less each month in your payroll, in your paycheck. And just do the math. If you make more or less than that, that's the amount that you'll pay. So what do you get for this monthly payroll deduction that's mandatory? Eligible individuals are going to get a benefit of up to $36,500 of lifetime benefits. That's $100 a day for 1 year for a variety of long-term care services. Long-term care services are the things we used to call nursing home benefits. So think of it as nursing home coverage, for lack of a better term. There's some very significant problems to the program. There are no benefits if you reside out of the state of Washington. So if you think that when you may retire, you may want to live outside of the state of Washington, you will not have any benefits from this program. There's also a 10-year lifetime vesting schedule. So if you work less than 10 years, you will likely have no benefits from this program. If you work more than 6 years, but less than 10, you would have a 3-year benefit after you stop working to be able to receive the benefits. And hopefully you won't need to have long-term nursing home coverage within 3 years after retirement. So for a lot of folks, this plan provides very little coverage or no coverage. So the other problem with this, quite frankly, is that there's no cap. So regardless of how much you make, if you make $50,000 a year working on IT with the school district, and you end up going to Google and make $1 million a year or $500,000 a year, you'll pay that 0.58% on the entire amount that you earn. The tax is also a lifetime tax. This tax will follow you wherever you go to whatever employer you work for in the state for the rest of your working career in the state of Washington. So what's the good news? The good news is there is a solution. There is a way for you to opt out of paying this tax. So employees that own personal long-term care insurance that is enforced prior to 11/1, that's November 1st of 2021, may apply for an exemption with the Employment Security Department from the tax. If you are approved for that exemption is permanent, and that individual will never be subject to the 0.58% payroll tax and would be permanently ineligible to receive long-term care trust act benefits. That's what we're talking about today. What we're talking about today is we have a plan that we're going to roll out that will allow you to get the exemption and you can opt out of paying this tax. We're not recommending that you opt out of it. 95% of the people that we show this plan to choose to opt out of it, but that's a personal decision you have to make. And so before I go on to the next slide, I'd like you to think of this in a specific way. I just described the benefits to you. It's $36,500 of lifetime benefits, $100 a day for up to a year. And if I showed up as an insurance agent at your door and asked you to pay $48.34 or $24.17 if you make $50,000 a year for this policy, and pay the same amount for your spouse for a similar policy, would you buy it? And the answer that we get back from folks when we ask them that is a resounding no. So if you do not opt out of this program, you are choosing to buy that benefit. So here are some important dates. So October 1st, October 31st, Halloween of 2021, that's the date that you have to have a policy in force. This is a one-time deal. If you do not have a policy in force by that date, you can never again apply for an exemption from the tax. You will pay that tax for the rest of your working career. If you're like my daughter, who's 18 years old, she would pay that tax for the next 47 years if she worked to age 65. So beginning on October 1st of 2021, you can apply for the exemption from the Employment Securities Department. So after you get the policy, then you're going to go online, apply for the exemption, give that to your employer, and they will not charge you that 0.58% payroll tax. That letter is yours. It goes with you. You take it from employer to employer, and anytime you change employers, you give them that letter when you're hired, and they won't charge you that tax. So January 1 of 2022, that's just under 3 months from now, or just over 3 months from now, you're going to begin seeing a reduced amount in your paycheck because of the new payroll tax that takes effect. So anyone without an exemption in hand on that date will pay that 0.58% payroll tax. So 12/31/22, so just New Year's Eve of 2022, just over 15 months from now, that is the last time. If you have a policy before November 1st, you have 15 months to go get the exemption from the Employment Security Department, then they're going to close that window. And then the other one I like to throw in there is January 1st of 2025. That's the first time you could get a benefit if you stay in the state program. So if you work for 3 more years and then you have a critical illness and need nursing home coverage on January 1 of 2025, on the very day that you retire, it's possible you could get a benefit from that program. So the solution that we've come up with, it's really straightforward. We looked for several things. One, it had to meet the guidelines to get the exemption, which is it has to meet the RCW definition of long-term care in the state of Washington, which this does. It has to have at least a 12-month benefit period, which this policy does. And they have to be an approved long-term care provider for either life insurance rider or long-term care direct coverage, which American Heritage Life, Allstate's parent company, is. So that's the first criteria, is it had to qualify for the exemption. The second criteria we look for the school districts is it had to be contingent guaranteed issue. We can't roll out a product that only works for people who are really healthy or only works for people who are a certain age. And so for the most part, we've got a product, the guaranteed issue age is 18 to 70 years old. As long as you can answer the question, yes, that you work more than 20 hours a week and know that you haven't been missed more than a week of work for anything other than minor illness or injury in the last few months, you're good to go. You can purchase between $10,000 to $50,000 worth of coverage in $10,000 increments. Once again, you can buy between $10,000 to $50,000 of coverage in $10,000 increments. Because the law does not specify a benefit amount, the $10,000 policy amount is more than sufficient to receive the exemption. I'm going to say that one more time. There is no specific policy amount required to get the payroll tax exemption. The $10,000 policy amount is more than sufficient to give you the payroll tax exemption. If you'd like to buy more, you can. But just so you know, if you buy the 10, you will get the exemption. Most importantly, for any of you who have a working spouse that does not have a program like this offered through their employer, spouses are also eligible to apply for coverage, and they also have guaranteed issue in amounts of either $10,000 or $20,000. If your spouse is not working for profit or wage, then they can apply for $10,000 of coverage. If they are working outside the home for profit or wage, they can apply for $10,000 or $20,000 of coverage. And I said outside the home, as long as they're employed, they'd apply for the greater amount. Once again, with spouses, I also would not recommend applying for greater than the $10,000 of coverage. So this program is payroll deducted. So all the premiums that you pay will be payroll deducted. So this is the most important thing we were looking for outside of guaranteed issue and meeting the requirements, and that's cost. We did not want to tell employees that they needed to spend $300 to avoid a $50 tax. That was foolish. So premiums are based on age and smoking status. So these rates are for non-smokers, but it's specific age. So if you're 30 years old, the rate would be $7.45 a month for a $10,000 policy. A 45-year-old would pay $16.64 per month. A 55-year-old would pay $32.34 a month, and a 65-year-old would pay $58.99 per month. So these rates for most of you, the vast majority of school district employees, will be significantly less than you would see reduced in your paycheck through the payroll deduction. There's another significant benefit to these rates. If you own these policies for a year, and we recommend that you own them for a year simply because the state may audit you at some point during the first year to see if you actually have a policy. If you own these policies for a year, you can terminate them and you don't have to pay them anymore. If you are part of the payroll tax program, you will pay that tax for the rest of your working career. The other component is that the enrollment is online. So there are no paper applications, it's all online enrollment. The one caveat to that is there's currently a bug in the system. And for folks that are 66 to 70 years old, if it's not resolved in the next few days, we will probably be issuing you paper applications. So the application process, you're going to get an email address that has, or you may have already gotten one that has a online website. You click on that website, click on first time user, enter in your last name, year of birth, month of birth, and then click find me now. You will then enter in a password that is provided and click login. You'll create a password and click save. Then you'll create a security question, answer it and click save, just like any online program that you start up. Then you're going to click apply for benefits. You're going to be taken to fields where your employer is given information. Some of it is going to be provided. You'll need to provide or confirm some of it. You're going to need to enter your social security number, your date of birth, address, all of those things. Once you complete all the required fields, you click continue. Then you're going to complete the fields in employment and click continue. Then if you'd like to add dependents, you're going to add them and click continue. This does not provide long-term care benefits for children. So I would strongly recommend that if you want life insurance for your child, you could add them for a $10,000 life insurance policy. But for the most part, this is designed simply for the employee and for the spouse to give them the long-term care benefit to opt out of the payroll tax. So you're going to add your dependent, if any, and then click continue. Then you're going to click on the enroll or waive and complete the enrollment process. Then once you're finished, you're going to answer several questions. You're going to answer questions about whether you have other life insurance. You can click yes or no. Those are questions that have to be asked by any agent that is selling life insurance to make sure they're not overselling the life insurance. If you click yes, you're going to be asked for the company name of your policy and for a policy number. If you don't have the policy number, you can simply enter in a dummy number. There's no verification process for this. It's just something that has to be answered. Then you're going to be asked whether this coverage is designed to replace other coverage. And the answer is going to be no. This coverage is not designed to replace any other coverage. It's simply to allow you to have the ability to opt out of the payroll tax. There's one other field that you're going to be asked to answer a question on. You're going to be asked to answer a question about whether you'd like to assign notifications for the policy. That simply means that if you'd like someone other than you to get notifications if there's a lapse in payment, they will put somebody else as the notifier on there. And that's for people primarily that are single, in case you have to be submitted to a nursing home and are no longer available to pay the bill, someone would get notice and then they would file a claim for you for the policy. So once you've completed all that, you click I agree and approve to complete the form. You're going to be taken to a screen that will show you the total amount of the premiums for the plan or plans you've elected for you and for your spouse, if you're enrolling a spouse. And that amount is the amount, that total amount is the amount that you'll be payroll deducted. Then you're going to click submit, and it will take you to a place where you can do an electronic signature. Once you click submit on that screen, you'll be able to print up a copy that shows that you've actually enrolled in the program. So once this is finished, and I went through this with someone who had never seen this screen before, 2 days ago, they enrolled themselves and a spouse, and it took them 6 minutes. This should be a very straightforward and very quick process. There really should be no issues with getting through this quickly. So once you've finished that process, and it's going to have to be after October 1st, and the cutoff date for the open enrollment period for this program is going to be the 24th of September at midnight. So you need to submit your application prior to 9/24 at midnight, or you'll be permanently paying in that new payroll tax. And that's a choice you may choose to make. But if you would like to opt out of it, your application needs to be in prior to 9/24/21 at midnight. So applying for the payroll tax exemption, at some point after October 1st, you're going to want to get that exemption letter that I mentioned. To do that, you're going to simply go to the Employment Security Department website, and we'll provide that information. We're going to give you more information on that as we get closer to October 1st. You're going to enter in your Secure Access Washington account information. That's the same account information you had to enter in when you enrolled for SEB. Then you're going to upload a photocopy of your driver's license. You're going to click on a box that states that you have long-term care coverage. Then you're going to click on another box that says you'd like to opt out and attest that all the information you provided is accurate, and attest once again that you have long-term care coverage. Then you're going to click submit, and you're going to get emailed an exemption letter. Once you have that exemption letter, you're going to take that to your employer. You're going to take that to your payroll team at the school district, and they will opt you out permanently from the payroll tax and from the long-term care act benefits program. So that's all the information that I have for today. My phone number is on the screen. If you're not viewing the screen, my phone number is 425-285-2301. And my email address is mrose@tpgrp.com. Please feel free to reach out and ask me any questions that you might have. You may also ask your payroll team if you have questions about how the process will work with your specific district. Lastly, please look for email flyers and PDFs of enrollment instructions, which will help you with the enrollment process. Thank you so much for your time, and have a great day.